Let's get technical for a moment and make sure you have your volume profile tool set up correctly. Getting these settings right is crucial for accurate analysis. First, and most importantly, you must use the ES and NQ futures charts, not the CFD versions like US 500 or NAS 100. Why? Because the futures charts have real, accurate volume data. The CFD charts don't show actual trading volume, they're synthetic. You need real volume data for volume profile to work effectively. When you're on TradingView, make sure you're looking at ES for S&P 500 futures and NQ for Nasdaq futures. These are the only charts that will give you the precise volume levels you need. Next, the critical setting. Change your row size to 1000. This gives you the most detailed view possible. By default, it might be set to 30 or another number, but 1000 provides the granular detail that makes all the difference in precision. You must draw your volume profile on a 1-minute chart, regardless of whether you're looking at previous day, previous week, or current session levels. Why? Because it gives you the most precise price levels possible. If you use 15-minute or other time frames, your levels will be less accurate. Here's a crucial point about data. If you don't have a CME data package, your charts will be delayed by 10 minutes. You can get real-time data either by buying it through TradingView for about $16 a month or by getting a cheap Apex evaluation account through Tradeovate. This often comes with free CME data and gives you a practice account too. The other settings like visibility, coordinates, and colors are just aesthetic preferences. The only setting that really matters for accuracy is that row size of 1000.
One of the beautiful aspects of volume profile trading is its flexibility, but there are still optimal times to trade for better results. Let me share the timing insights from the strategy. For the London session, I tend to stay out between 2–3 a.m. New York time. The market can be a bit more unpredictable during this hour. After 3 a.m. is when I really start looking for setups. The London session offers good opportunities, but you want to avoid that early transitional period. For New York, which is often the most active session, I like to stay out of the first hour from 9 to 10 a.m. The market can be quite irrational during this time, with overnight gap fills and initial reactions to news. From 10 a.m. onwards is when I'm really looking to trade. This is prime time for volume profile setups. For Asian and overnight sessions, avoid the void between the end of New York at 5 p.m. until about 8 p.m. This is typically very quiet with limited volume. However, from 8 p.m. to midnight can offer solid trading opportunities. Here's the key insight. Unlike other trading strategies that rely on specific kill zones or session-based setups, volume profile works whenever the market is open. If there's trading activity, there are potential setups at volume levels. This flexibility is perfect if you have a day job or other commitments. You don't need to be glued to your screen during specific hours. Whether you trade before work, during lunch breaks, or in the evening, there are always volume levels to work with. The strategy doesn't care about time zones or sessions, it cares about where volume occurred and how price reacts to those levels.
Now let's talk about the different types of volume profile levels you can draw and when to use each one. This is where the strategy becomes really practical. Previous week levels are drawn from Monday 00 to Friday 16:59 of the previous week. These are your longest-term volume profile levels and often provide the strongest support and resistance. Use these when you want to see the bigger picture and identify major areas where institutional activity occurred. Previous day levels are drawn from 9:30 a.m. to 4 p.m. of the previous trading day. These are probably the most commonly used levels and provide excellent intraday trading opportunities. They show you where yesterday's main trading activity occurred. Current session levels depend on when you're trading. If you're trading before the 9:30 a.m. open, draw from 6 p.m. of the previous day until the current price. If you're trading after 9:30 a.m., draw from 9:30 a.m. to the current price. However, if you're using current session levels, it's best to wait until at least 10:30 a.m. to let enough volume build up for reliable levels. Here's what to do when you're not near any previous day or week levels, what I call no man's land. You have two choices. Either don't trade because you're not near a significant level, or use the current session levels to find a setup. The key principle is this: you always want to be trading near a volume level. If you're in the middle of nowhere with no significant volume levels nearby, your probability of success drops dramatically. Remember, all these levels must be drawn on 1-minute charts for maximum precision, regardless of which time frame you're analyzing.
Here's where volume profile trading becomes more art than science. When you're at a volume level, you can't just automatically buy at value area low or sell at value area high. You need to read the market's behavior. Let me teach you the 3-factor analysis system. Factor 1. What previously happened at the level? This is arguably the most important factor. Are we repeatedly bouncing from this level? Have we broken through it before? If you've seen multiple rejections from a level and price approaches it without much aggression, you can expect another bounce. History tends to repeat at volume levels. Factor 2. How aggressive was the move into the level? This is crucial. If price slowly grinds toward a level with normal candles, that's very different from price slamming into a level with huge displacement candles. Aggressive moves often lead to level breaks, while measured moves often lead to bounces. Factor 3. Candle rejections and behavior at the level. When price reaches your volume level, what are the candles telling you? Are you seeing long wicks away from the level? Are buyers immediately stepping in, or are sellers overwhelming any buying pressure? Are we seeing indecision, or is one side clearly in control? Here's a real example. If you see a level that's bounced twice before, price approaches it slowly without aggression, and then you see candles with wicks rejecting the level, that's a high probability setup for another bounce. Conversely, if you see a level that's bounced before, but price hits it with massive volume and displacement, and candles are closing through the level rather than wicking off it, that level is likely to break. This discretionary analysis can't be programmed or automated. It's developed through experience and repetition.
Let's get practical about risk management. How you place your stops and targets can make or break your volume profile trading success. The stop losses, here's my approach. Always cover the level and give it room. What does this mean? Don't place your stop loss on the level you're trading, place it beyond the level. These are sensitive areas where price often retests before moving in your intended direction. The last thing you want is to enter a trade at a volume level, have your stop right at the level, watch price come back and tap it a few times, get stopped out, and then see price rocket to your intended target. Give the level breathing room. I typically look for structure beyond the level, maybe a previous high or low that covers the level and provides adequate room. Think of volume levels as zones rather than exact price points. For take profits, I use 2 main approaches. First, target the nearest significant structure, recent highs, recent lows, obvious support or resistance areas. Most of the time, this is what I'm doing. Second, target another volume level. Maybe I'll short from the previous day's point of control and target the current session's value area low. You can also combine approaches. For example, short from the previous day's POC and target the current session's VAH. Or long from the previous day's VAL and target the current session's POC. If you're really stuck on where to take profits, just use a fixed risk-reward ratio like 1:1, 1.5 or 1.2. The key is having a plan before you enter the trade. Know exactly where your stop goes and where you'll take profits. Volume Profile gives you objective, data-driven levels for both.
Let me share some real trading examples from the strategy to show you how this all comes together in practice. Overnight Asian session example. I entered long at the value area low during Asian hours when price was trading at a discount. The setup was clean. We had previous bounces from this level, no aggressive selling into it, and clear candle rejections. I took partial profits at the value area high and held the rest. During the Tokyo Open, additional buying pressure pushed us back to the VAH for a full target hit. New York session range trade. This was a beautiful scalping opportunity. Price was ranging between the current session's point of control and value area high. Every time price touched the top of this range, I took shorts back to the POC. Every time it touched the POC, I took longs back to the VAH. I counted 9 viable trades from this single range setup in one session. Weekly level trade. I had a clean short setup at the previous week's point of control. The level had held multiple times before, and when price returned with measured buying rather than aggressive momentum, I entered short. My stop was placed above the previous high that covered the level, and I targeted the previous week's value area low. The trade worked perfectly as sellers stepped in to defend the weekly POC. The key insight from these examples is that each trade was based on the same principles: identify the volume level, analyze previous behavior at that level, assess the aggression of the approach, look for candle confirmation, then execute with proper risk management. Notice that none of these trades were overly complicated. The edge comes from recognizing high probability setups at proven volume levels and executing them consistently.
Alright, so I know it's probably a little confusing for you to follow these trading examples or case studies, considering that they're only written out for you. So for anyone, and honestly this is regardless if you did understand the case studies, I will highly recommend that you check out the playlist that I have linked down in the description below. That playlist will take you to Cami Capital's channel, and it is the playlist that he made for trading with volume profiles. Honestly, I have not seen a better playlist than his, and part of his playlist was actually inspiration for some of these slides. So I will highly recommend to check him out, and I would and will give some examples later on down in the future, and possibly even some of my trading forecasts using volume profiles. But I honestly think Cami Capital is one of the best volume profile traders I have seen, and that is why I will highly recommend his channel and his content specifically for volume profiles. So check him out, study it. I promise you guys, you won't regret it.
Let's talk about the psychological and practical aspects of mastering volume profile trading, because technique alone isn't enough for long-term success. Practice is absolutely critical. I recommend taking 40 to 60 trades per day initially, even if they're micro contracts or demo trades. Why so many? Because you need to rapidly build experience with how markets react at volume levels. I once took 300 trades in 5 days. That gave me a year's worth of experience compared to someone taking 1 or 2 trades per day. The strategy is intentionally simple, and this might mess with your head if you're coming from more complex approaches. You might think there has to be more to it, but I promise you, everything you need is in these core volume profile concepts. Don't overcomplicate it. Here's the key insight. You can't teach discretion through rules or checklists. The ability to read market behavior at volume levels comes through repetition and experience. You'll develop an intuition for when levels will hold versus when they'll break, but this only comes through practice. Make mental notes as you trade. If you keep getting stopped out at point of control levels, maybe they work better as take profit targets for you. If value area high consistently provides good short entries, lean into that. Everyone's trading personality is different. Position sizing should keep you emotionally detached. Use sizes that let you focus on the process rather than the profit and loss. The goal is to build experience and confidence first, profits second. Remember, this isn't about perfection, it's about consistency. Take your losses in stride, learn from each trade, and focus on the repetition that builds expertise.
Let's wrap up everything we've covered in this comprehensive volume profile trading guide and set you up for success going forward. You now understand the core concepts that drive profitable volume profile trading, The value area, where 70% of volume occurred, the value area high and low that define premium and discount zones, and the point of control that represents true fair value. You know about high and low volume nodes and how to use them as take-profit targets. You have the technical setup, ES and NQ futures charts, 1-minute time frames, row size 1000, and real-time data. You understand the optimal trading sessions and how to draw previous day, week, and current session levels. Most importantly, you have the 3-factor analysis framework. What previously happened at the level, how aggressive the approach was, and what the candles are telling you at the level. Your next steps are clear. Start practicing immediately. Take numerous trades to build experience rapidly. Focus on the process, not the profits initially. Make mental notes about what works for your trading style. Remember, the edge in volume profile trading comes from repetition and experience, not complexity. Every successful volume profile trader went through the same learning curve you're about to embark on. The levels are objective, the setups are clear, and the strategy is simple. Now it's time to put in the work and develop the discretion that separates profitable traders from the rest. Start with demo or micro contracts, focus on the key levels, and trust the process. Volume profile trading can transform your approach to the markets. Now go make it happen.
Thanks so much for watching today's video. I really appreciate you taking the time to tune in. If you enjoyed it, make sure to follow me across all platforms so you don't miss future content. Down in the description, you'll find links to the brokers I personally use, some backtesting software I recommend, and of course, our free Discord community, where you can connect and learn alongside other traders. I'll leave you with one of my favorite verses, Psalm 27 verse 1. The Lord is my light and my salvation. Whom shall I fear? And as always, remember, strive for progress, not perfection. I'll see you all in the next one.